many mentors that were chasing net worth, but I just didn't see the utility in it. You know, it's money that's locked up. You can't use it today.
You either hire a financial advisor, right, to manage everything, and you focus on increasing your income, and then you just trust what they say, or you start self-educating and you start playing the game yourself.
Rich people have a lot of money and wealthy people have a lot of time. They generally have 50 to 60% of their net worth in alternative investments. And so Wall Street has deemed it alternative.
If you're not investing in some form or fashion, it's going to be really hard to survive, like truly, like actually like live your life.
More money to get a worse return than if they just invested their own dollars, but I had lost money when I did the math and figured out how much I put in, and I was dumbfounded.
Justin, officially welcome to the Wealth Juice podcast. Corey and I are so excited to have you on the show, man. It's been a long time coming. We've been following you for a while. You provide a ton of value in this space, and we're just excited to have you here, man. So thanks for joining us.
Well, thanks for having me. It's great to get time with you off air. It's, fun just chatting and hearing both your stories, Ryan and Corey. And, we're, having you guys on my show right after this. And I'm excited to explore all the cool things you guys are up to, because you guys are making waves and having a huge impact on people, especially with your podcast reach.
Yeah, thank you so much. We feel the same about you. Seems like we're cut from the same cloth in many ways, and, just trying to provide as much value as we can and serve others. And so I guess with that, a lot of people start... They start working the 9-to-5 job and get in the corporate cycle, and then they start researching how to become rich, how to become wealthy, and how to, build passive income streams in this financial independence motto and mantra, right? And so I want to talk about you founding the Lifestyle Investor and just the meaning behind it and how you got into this world from, potentially doing something else previously.
Yeah, sure. For me, I really wanted to kind of create a brand. Now, I never thought the brand would get as big as it has become. But what I wanted to do is create a place that educated people on how to buy assets that produce income. I felt like that education was lacking in the marketplace. I think you've got Wall Street that really kind of dominates the education space. And I don't know that serves the vast majority super well. And so I had experienced success as an investor, younger in my years. And I had this big realization early on. I was, my friends were chasing net worth. I had many mentors that were chasing net worth, but I just didn't see the utility in it. It's money that's locked up. You can't use it today. It's subjective oftentimes, especially if your business is tied into it and your valuation is different than what a company who wants to acquire you is going to value you at, especially without you. The stock market is up and down. And so it just kind of depends, when, what the timing is of retirement. And it's just, to me, it just didn't feel like that was the right pursuit. And so I figured, well, if I could create passive income that covered my life, well, then net worth really doesn't matter. Net worth is, it's a natural byproduct of passive income. But before I was ever a millionaire, I had financial freedom. Like, I knew what it cost me to live. I knew what it cost me to survive, first and foremost, then what it cost me to live on a monthly basis. And once I started experiencing the time freedom that I had, there was a quote that really resonated with me that I read a long time ago, that rich people have a lot of money and wealthy people have a lot of time. And I was like, that's what I want. I don't have to have all the money in the world. I want to own my time. I want to be able to make all the decisions that I want to make and be at all family functions and, travel because I want to, not because I have to, run a business because it's a passion project, not because I need the money. And so, really my world changed when I moved to that strategy. I figured out, for me, it was lifestyle income, and that's where the Lifestyle Investor kind of came from. And then once I had achieved it, I wanted to help other people do the same thing. And, it's not as hard as people think, and it doesn't take as long as the typical, invest in the stock market, wait and see type of grind.
Yeah, I couldn't agree more. And as we've kind of gotten deeper into this journey, Corey and I can speak, kind of perfectly on this ourselves and going through it, is at some point you feel asset rich and cash poor. And I think that's just the life cycle of many businesses. But I think a lot of us, as we go through the journey, you try to focus on cash flow, but it ends up being equity plays a lot. especially in real estate, especially in businesses. And so I want to talk about, for people that are like, hey, I understand this. I don't want to be in 3, 4, 5 years of this journey and just be heavy equity. What do you suggest, or what is your kind of foundation that you talk about when it comes to these low risk, high reward cash flow investments?
Yeah, I think there's different paths that people can take. I wanted to get to financial freedom as quickly as I could. So I was very heavy on like the cash flow component of the investments that I did. And then I think there's a time component. So, if you have very little time, well, it may not make sense to buy assets that you are running, or maybe you are and you're, hiring a management company to run them. Or you can be an LP investor, a limited partner inside of a vehicle that someone else is running. And so like if you have a little time, you can make the argument of maybe LP being the better path. If you've got a little more time, or you want to just take a big leap out of corporate America or out of your business and really start to put the time in, I think you can accelerate it quickly when you own. So part of me is, feels like it depends, right? It depends how much time someone wants to put into it. Because there are endless amazing deals. Like this whole concept of a deal of a lifetime, like there are tons of them. And I actually think this whole idea of deal of a lifetime gets people into trouble. There's an emotional component that makes it kind of like stimulates poor decision making. Because you're investing based on emotion, not based on fact, not based on like a set investment criteria that you're looking over. And so, I think that the path that if you have the time that you want to buy assets and you want to manage them, you'll probably move the needle the fastest that way, and you'll get a great education. But if that's not you, and some of what you guys talk about, which I love, which is stay in corporate America, keep your gig, and utilize some of these passive investments that you don't have to operate. I think that's a brilliant way as well. So I think it depends on the person. It depends on the season of life. It depends on, are your kids young? Are they older? Are you in the grind? Do you have time? So I think all those factor in. But at the end of the day, we all know that monetary supply is going to expand, right? There's going to be more quantitative easing. There's more money being printed or digitally added to a ledger. So the value of dollars is becoming worth less. So really the only way to keep up is to own assets, because as monetary supply expands, so do the value of assets.
100%. So I want to touch on this. So there's a bunch of ways we can go about this, but when you mentioned this, we're very much dialed in with quantitative easing right now, and the dollar be going so down in value, and just your purchasing power is it feels like close to nothing compared to what it was even 5 years ago. So my point is, we talk about these assets all the time. For us, it's real estate, small businesses, Bitcoin, other things, right? But like those are like 3 pillars. Do you guys focus in the lifestyle investor on small business acquisition, or is it real estate? Is it a combo of everything? Maybe talk to us about like the foundational piece and how they all kind of play into each other.
Yeah, great question. Our goal, Ryan, is that we want to be anything, everything alternative investment. So we feel like that's the underserved market. And so I study billionaire asset allocation. I study billionaires' portfolios. I pay attention to family office data. So when you hear about a single family office, meaning the group that runs the investments and often just everything for the life of a billionaire will be a single family office. And then generally, if you're not a billionaire, it's a multifamily office. So I kind of dive into this data. And what's interesting is that most people buy Wall Street's education, which is put the majority of your net worth in the stock market, which is actually pretty high risk. There's no way to really diversify enough in that single sector to protect yourself against the downside risk that can happen. If you look at the wealthiest people, they generally have 50 to 60% of their net worth in alternative investments. And so Wall Street has deemed it alternative. Billionaires, this is their primary, right? The stock market's actually their alternative investment, meaning they only put 15 to 25% typically in the stock market for the long haul. And it's not a day trading thing. It's often just so they can borrow against it to buy more alternative investments. So it's, a non-taxable event to borrow versus to sell, inside of their stock portfolio. And so we've built Lifestyle Investor to kind of encompass all the alternative investments. And so, yes, we love buying businesses. I bought a ton of businesses. I've started them. I've bought them. I prefer buying them. It's really fun to sell them. We just did a live event through our Lifestyle Investor community on buying and selling businesses with some industry experts. So that was fun. Of course, we love real estate because that's how I got started. So I know it really well. I've invested in every real estate vertical or sector, unless it's like super obscure. And I've done very well. And keep in mind, there are different seasons, different economic seasons where different asset classes pop or shrink. So it's important to be cognizant of what season or times that we're in. And then something that you didn't mention that we love is private credit. So real estate, just to backtrack, that's generally about 10 to 20%, sometimes as high as 25% of the net worth of these billionaires. Private credit's like 5 to 15%. So, I mean, it is a significant component. And for those that don't know what it is, you've got bonds on the public side. So, if you're investing in the stock market, you're buying stocks and bonds, and you're typically doing something around a 60-40 split, which is touted as the safest allocation there. But for the last couple of years, it's been one of the worst allocations, right? Because stocks and bonds haven't really decoupled the way that they have in the past. And so, if you look at like all around asset allocation, I just gave some of the numbers. Bitcoin generally is 2 to 5% of someone's net worth. So we're very big on that. And so if you add all of this up, you're generally closer to about 60% alternative investments for the wealthiest people in the US and in the world.
So really quick, where I just want to wrap this up. So based on that, it's funny, the 60-40 split stocks and bonds, I think is just a thing of the past in 2025. Right. And so I just want to, for people listening, we have a lot of people that are, maybe newer or like moderate investors, right? They maybe have the stocks, the bonds, they're in real estate a bit, but they're hearing alternative investments for the first time. Like, whoa, this is super interesting. This is the top tier wealthy of the wealthy. Get into this. We also had Richard Wilson on the podcast a couple of weeks ago. I know he was on your show.
I love Richard.
He's the man. He's so intelligent.
He's
We're actually
awesome.
going to, he's the coolest. And this opened our eyes to family offices, things we had truthfully never heard about before. We're going to his event in New York in about 2 weeks. But my point in bringing all this up is, at what point for a traditional investor, if you will, sophisticated, probably right on the curve to accredited, right? Just about $1 million net worth. Is there a point where then you start investing in these alternative investments, or is it something you can start day one? Where, like, I'm very curious on what time horizon or timetable an investor could pivot and kind of start working in this sphere, if you will.
Yeah, I mean, I think an investor could start at any point in time on the alternative investments, and what you will find is that if you're putting both of these in the category for these billionaires, like what do they do? Do they go stock market heavy, or do they go alternative investment heavy? You'll see that most of them started in alts, and when they made money, they put a portion of it inside public equities. So I think that there's you don't even have to be an accredited investor to get started in real estate or get started in, private equity. You could buy a company. So there is a little bit of a misnomer with the accredited investor status. Like, you can buy assets that you own, whether you're accredited or not. It's if you're getting into other people's offerings, right? So if you're accredited, by all means, there should be that sort of diversification. But I'll make the argument all day, every day, that it doesn't matter, if you've hit $1 million net worth or not, or if you're making, $200,000 by yourself or $300,000 as a married couple. That shouldn't preclude you from getting access to alternative investments. I mean, that is where the majority of wealth is made. And look at the last century. If you look at the S&P 500, you've got a century-long return at about 9.5%, but that same century-long return in alternative investments is just under 15%. So you're talking over 60% outperformance in alternative investments, and that's why the ultra wealthy like this asset class.
Yeah. This is interesting stuff. I think even before we get into all of the details of the alternative investments and looking outside of the typical stock market, I'm curious about your start. It sounds like real estate was your way to get into the investing world. You mentioned before becoming a millionaire, you were financially free, and I want to know how you did that. What was the strategy that you used to become financially free? at a young age, and again, I don't know how young you were, maybe you could tell us, but like, what was the strategy that worked for you? Because I'm curious if you still feel like that strategy can be used today in 2025.
Yeah, so for sure it can be used today. I'll kind of walk you through my story, but I think, I've been investing for like 26 years now. I got started in the stock market, and this whole idea of like building your wealth in the stock market, like you can do it, but the world of day trading is over. I mean, there's a difference between efficient and inefficient markets, and the stock market is as efficient of a market as you're ever going to find. So, if you're competing trying to day trade on that market, look at the stats. Look at like, number one, Flash Boys is a great book by Michael Lewis that outlines all this of the advantage Wall Street has, but with quants, with algorithms, with AI that, can make micro trades, 1,000 trades in the time that you click one button. It's just unrealistic to think that you can compete that way in the short term on a day trading sense. But let's even look long term. If you look at the last 15 years, you've got less than 5% of money managers that have outperformed just the S&P 500 index. If you look over the last 30 years, it's less than 1%. And it's a very small sliver. It's not even close to 1%. So most people are paying a financial money manager, right, a professional in the financial services industry, more money to get a worse return than if they just invested their own dollars using, Schwab or Fidelity and investing in indexes themselves. And so like that's the first thing to think about. And so I remember just having like a horrible experience with money managers where not only was I being told via statements about the returns I was making that were inaccurate because they were using average rate of returns and not actual rate of returns. So I was underperforming every number that was there in real dollars. And that's really what, helped me make the switch to getting into the alternative space. And so with that realization, I was like, not only is my money tied up and I can't use it today, but I'm not even getting the returns that they're saying that I'm getting. And I had this crazy situation where I didn't have anything that said that I had negative returns for any given quarter, but I had lost money when I did the math and figured out how much I put in. And I was dumbfounded. I was like, how is this happening? And I just had the realization I'm outsourcing my financial education to other people that, on paper are qualified, but in actuality are not. And I need to bring that in-house. I need to take ownership of my own financial education and what's going to happen for our family. And so that's when I bought our first piece of real estate. We bought a mobile home park. And that first investment, and this is going back, 15-ish years, 16 years maybe. That first investment, the cash flow from that was literally equal to what my wife was making as a teacher. So she retired immediately. We started our family, had our daughter. I bought another mobile home park that covered our survival income. I bought a third mobile home park within that same year, it was that next year, that covered our lifestyle income. And then from there, 100% of the dollars that came in above and beyond what it cost us to live was surplus income. So, I had worked diligently saving 15, 20, 25%. Eventually I got up to, I was saving about 50% of what I was making, because instead of keeping up with the Joneses, we kept our lifestyle equal as I made more money, and we just invested more. But once you get to surplus income, now 100% of that goes towards compounding wealth and impact on the scale that you want for the organizations that you are really passionate about. And so, yeah, that was a total game changer. And the more cash flow that came in, the more surplus we had, the more I had to figure out what to do. And that's why I became a lot more savvy in alternative investments, because I had to figure out now, the problem used to be I have no passive income. Now it's I have more than I know what to do, which doesn't sound like a problem, but it really was a problem. And so I had to really hone my skills and figure out, now that cash flow is there, how do I diversify to make what I have a lot safer and take out, one-off situational events like a COVID that could derail me if all my assets are in a single asset class.
This is really good stuff, and this is next level. And I think we all go through this as investors or people that get into the game, right? And we either there's two facets here, right? You either hire a financial advisor, right, to manage everything, and you focus on increasing your income, and then you just trust what they say, or you start self-educating and you start playing the game yourself. And maybe while you're playing the game yourself, you still have an advisor and you're kind of like double dipping. But this is the new world for us, right? We're talking alternative investments. Most traditional advisors don't even go into this world. They keep it exactly the 60-40 split that we talked about. My question for you is, how can the traditional investor go to an alternative investment portfolio or kind of weave this in? Are there advisors out there that handle this where you like migrate your entire portfolio, or they can kind of help you manage everything? I'm just so curious versus self-educating and doing it yourself. Are there resources out there that help with this?
Well, there really aren't too many, and what's fascinating to me is one of our largest percentage of mastermind members that have joined the Lifestyle Investor have actually been financial advisors running big time operations. And I'm just blown away by how little they know in the space of alternative investments and cash flow. And so it was really eye-opening to me to recognize, wow, this traditionally trained profession is very dialed in on kind of like one little way of doing things, but the way that the wealthy do it is totally different. And so I don't think there is a whole lot of educational platforms on how to invest in alternative investments. A lot of what you see out there, I actually don't think is quality in the form of education. It tends to be a lot more people that have not really done it themselves, but they're selling the education and making money on the education, meaning they're great at marketing. They're great with their social media presence. But newbie investors, what we would call retail investors, equate social media followings with expertise. And that's a big no-no. Most of these people are not experts. They make their money selling the education. They don't make their money doing the thing that they're selling. And so I just think we have to be careful. And then the alternatives that I do see that people have access to often are not great alternatives. And whoever is showing it to them, whatever money manager is showing it to them, they're getting a rip somewhere in there. They're getting their commission, and that's why they show it. And anything else that they wouldn't get, some commission on is probably not a good deal in their eyes, right? So there's a little bit of misinformation, in my opinion, in that space. So part of why I built Lifestyle Investor was to have a place that people could come and learn. And we've built our whole model as like a membership community. So I wanted to be the one place people could come where they could get information, education that wasn't based on making money off of their money. So our whole philosophy is I don't make any money on anyone's money. Any deal that we would ever do, the only way I can make money is because my own money is in the deal. I wanted to get completely away from that model of assets under management or, carry or whatever it was. And so I think part of the reason we've had the success that we've had is there aren't many other options to get this type of education and information without a strong bias.
100%. So I know that you have the book. And then also I've seen the Mastermind. Your website's great, right? It kind of showcases what you have, but I'm curious, just the stepping stone someone would potentially take. Say they're like, hey, I'm really interested in alternative investments and I have my financial backing set. I have the 401k, Roth IRA, brokerage. I have a little bit of real estate. I'm ready for the next step. Maybe they have some Bitcoin too. And is it more so like, hey, you're going to come study a few courses. We're going to meet weekly and it's like a one-to-many coaching program? Or just give me the background on it. I'm so curious how you run your ship and then how people can essentially be served through it.
Yeah. So we want to, it was interesting. Early days, I did a lot of one-on-one coaching, and that's a very linear equation, right? So, there's value transfer kind of linearly from one person to the next. And I felt like that didn't serve the masses as well. I have found that, when you create kind of like a web of all these brilliant people, all these like highly successful people. They can all learn from each other. And so my goal is not to be the guru. Like I want to have such a sophisticated, like impressive group that the community is the powerhouse, and the collective wisdom of the group just dwarfs anything that I know. And that really is what we have created. And so, we of course have educational products around what we do. We have a vetting deals course. In fact, if we want to get into it, one of the biggest missed opportunities, in my opinion, for most people is tax strategy. So we have a tax advantage or a tax strategy masterclass that we have available. But from a community standpoint, we do a lot of events in person. We'll do events virtually. We have 3 much larger events that are live. And then we have about 12 smaller events once a month, approximately, where we try and do a smaller number. But we've always been pretty hardcore on membership, keeping that number low, never really opening it. The goal isn't for Lifestyle Investor to be this huge profit center, even though it's a very successful business. We have a wait list, and part of the reason we started our next tier of our mastermind is because the wait list got so big, and we kind of opened up a new community called Tribe of Investors, which kind of appeals to someone that makes less, has a lower net worth than those that were in the lifestyle investor community. But we'll do everything from education. We like to do 1 to 2 education calls a week. We like to do 1 to 2 education calls a month, 1 deal a month. Sometimes it's 2, sometimes it's 3. But we like to at least average at least 1. And then we like doing just really cool networking adventure type of events. So we're going to do this white glove trip to Japan here in the fall. We're doing a trip to Dubai in the fall. And so, getting some, what I like to refer to as carefree timelessness, something I learned from Matthew Kelly.
Yeah, I love it, man. I want to talk about some of the investments that you think that are working today. Like, there's a number of ways to get involved. And I think the point of our show, The Wealth Juice, is to explain to people that if you're not investing in some form or fashion, it's going to be really hard to survive. Like truly, like actually like live your life. Just, I wish it wasn't this way. And I see people struggling all the time. And I wish it wasn't this way, but that's the way of the world. And unfortunately, that's just how it is now, especially in the Western world. So I want to know what you're seeing in terms of whether it's, a specific alternative investment, something you invested in recently, something somebody in your community has invested in. If you would be open to just sharing some details, maybe some numbers, and I think it would be helpful because we're covering it from a bird's eye view, but there are people in here who are listening, who are potentially interested. And I'd love to hear some tangibility around what you're seeing in 2025 as we move into 2026 even.
Yeah, it's interesting. I have this list. It's kind of like my hit list of all the things that I like right now. So one of the things that I talk about, so in my book, I talk a lot about invisible deals. That's one of my 10 commandments for cash flow investing, for passive income and financial freedom. I have my 10 investment criteria. And one of them is finding invisible deals. So what does that look like? Well, it could look like, finding an off-market deal. Maybe you guys found something, negotiated with like a mom and pop, and you're able to buy this thing without going through some sort of a competitive process on the market. So that'd be a great example of an invisible deal. I also love invisible deals from the standpoint of what is the data telling us if we really study it? What is like an emerging trend that's not yet mainstream that we can get in early? And so I think that the season, the time that we're in always matters. So I got into mobile home parks super early, and so people thought I was crazy. That has turned out to be one of our better investments, the portfolio that we built there. And then, in addition to that, I got into single family home rental super early. I built a company with some partners that we were able to scale maintenance and service and rehab work for the institutional owners. And so that was a really cool trend that we caught. SFR wasn't even an asset class, pre-global financial crisis.
Yep.
And so recognizing what was happening then, it was like, yeah, let's pivot. Let's jump on this because we know this is a thing. During COVID, I saw all the data of people buying pets and specifically dogs and needing dog training. So I bought a dog training company with a couple of partners. And we scaled that thing in like a year and a day. We sold it for an 11x return on our money. And it was just crazy what we were able to do. And so I like studying this. And right now, we're on the precipice of the greatest wealth transfer, literally in the history of the world, somewhere to the tune of like 85 to 105 trillion dollars is going to change hands in the next 5 to 15 years. Which is massive. So you're talking baby boomers to millennials. So if you want to know what is next, pay attention to all the millennial data. What do they like to do? How do they spend time? What does recreation look like? What does work look like? How do they want to live? How do they want to exist? How do they think? What is leisure? What is work? What do hobbies look like? There's just so much opportunity there. And then, today in 2025, I'm a huge proponent of Bitcoin. I think that's going to continue to climb, especially with institutional adoption and sovereign nation adoption. I'm a huge fan of I would say industrial and mobile home parks are probably the two leaders on the real estate side of things. Based on today and based on really the last 8 years, they've been the two highest performing real estate asset classes, even though a lot of people think it's multifamily. Which did really well for a period of time, and then right now is struggling a little more. You have to be a lot more intentional of finding off market or distressed deals, right?
Yep.
And then I'm a huge fan of AI. Now I'm not just on the bandwagon now. I've been investing in AI for about a decade, so it has been around for a long time. Robotics, that is going to continue. I've been 10 years or so investing in robotic companies. Private credit is huge on the rise. What we've seen over the last 5 years is private credit just ticking up. So as banks are becoming more frugal and more conservative and having like higher criteria for what it takes to get things done, these private companies are coming in and they're solving the problems that the banks can't solve. And so, anytime you have a new emerging market, there are going to be plenty of people that are new and don't know what they're doing, but there are plenty of people that are just world beaters at it, and you've got to find the right sponsors. I could go on and on. I mean, outdoor industrial storage, real estate and housing around port cities and border towns, are a couple of other areas. I mean, I've got literally a list of like 20 things that I love right now that I think are going to go to the moon. And I'm wondering if I could pull that up quickly, but that off the top of my head, that's a handful of them.
Well, I'll tell you this: take your time. We'll definitely we want that list for listeners as much as you're willing to share. Corey, I know you had something. Sorry.
Yeah, that's great. I think that's even just naming those is really helpful. But I kind of want to get a little bit more personal now, just knowing what you know about the world and what you've learned about investing. I'm curious if you learned anything about becoming financially free at a younger age, just based on and you mentioned X amount of years ago. I'm assuming you were in your 30s at the time of becoming financially free. Ryan and I are in our early 30s. So I wouldn't say that Ryan and I are fully 100% financially free. We have a great baseline and we still bring in active income. Like Ryan has this full-time job and I'm running our business. So, we have a level of financial freedom, but I'm curious, with you covering all the bases plus some, what did you learn about that? And I asked the question specifically because sometimes I'm surprised on the answer of what I hear from people. Sure.
I mean, I really believe that financial freedom eats net worth for breakfast, lunch, and dinner all day, every day. And so the earlier you can achieve that, the higher quality decisions you're going to make. So when your lifestyle is covered, you're going to make better decisions professionally, for your business, for your family. Questions that you typically solve, with the top of the fulcrum being like, hey, can we afford it? That flips. Like, that's probably not the best quality question to ask if you're making a decision what's best for the customers, what's best for the clients, what's best for your family. Like, these are better quality questions than, can I afford it? Can the business afford it? Right. So I think the moment you solve for your financial needs, what it costs you to live on a monthly and annual basis, the quicker you get into doing things that you love to do, finding things that really kind of create passion and help you live a fulfilling life, make better decisions all the way around in every aspect of your life, and then have time to like continue to do impactful work, like whether it be from being, let's just call it generous from a donation standpoint, or whether it be like true impact where you're doing something it's a vocation, you feel a calling, and you're able to impact a lot more people than just through donating, because you're pouring your own life and energy into it. So yeah, I mean, the earlier you can experience and achieve financial freedom, I think is totally worth it, because everything flips. The moment you don't have to make more money, the game has changed. And the ability to say no so that you can get more in alignment with what your values and purpose are for areas that you can say yes to, just you get tenfold clarity. It's just night and day.
What got you into mobile home parks prior to anything else in real estate? And the reason why I'm asking here is because in 2009, it's what it sounds like, or maybe even before that, you said 16 years. So that would be 2009. I forget mobile home parks. People thought real estate was the devil back then. You know what I mean? Just single family homes. And Rye and I say this all the time. We teach people how to buy their first rental property because of the way that it changed our life. If somebody came to me and said, hey, I want to learn how to buy mobile home parks, I'd tell you to go find somebody else that can teach it, because we don't own any mobile home parks. So just going back to, people teaching things they don't know. I want to ask you about how you even thought about mobile home parks at that time period when people were running from real estate in general. And then, cause that's like, it's just to me, it sounds like you start with single family, you go into multifamily, and then you're like, hey, what's out there? What's next? Maybe I'll try mobile home parks, but you did it first.
Yeah, I did a pretty deep dive on all the real estate asset classes, what type of cash flow exists, what is the down payment typically, what are the industries where seller finance is highly prevalent, and what are like what's the least amount of work to the highest return. And so mobile home parks really jumped out. And then I would also say like peer group and mentorship had a lot to do with it too. So I found the number one world's best mobile home park operators and acquirers and really learned from them. And they took me under their wing, which was really cool. I had a good buddy that also was learning from them and kind of got the start early. So when I was a little too timid to jump in with both feet, I ended up loaning him money to be able to get his first mobile home park. And then I saw, he gave me access to all the financials. So, I mean, I saw that this thing was a cash cow. He bought another one. I was like, man, why am I lending you money? He was paying me 10%, which seemed really good. But, what I learned pretty soon is that he was making more than 10%, right? So he was paying me 10 and he was often making 20% after the 10% he paid me. And so I was like, I got to just get in the game. And luckily my buddy's a great friend. And he's like, yeah, I've been telling you, get in the game. And so that was it. It's like, if I'm going to learn from someone, you got to be world-class at the thing, right? Everyone's a life coach today. The problem is most people are not experts at the thing that they're teaching. So I'm only going to pay someone, and I'll pay top dollar. I've got no problem with that, but I'm only going to pay someone who has years of experience and truly is the outlier. And so that's why I got into it. For me to build what we built, and I never raised money. We just did it whenever we could. We built our portfolio. We have a top 100 portfolio in the US in terms of size. And we just did it one park at a time, over the last 15, 16 years. And that has proved to be a great strategy.
Yeah. I just have one last question. I'm gonna let Rye go into this. And Rye, actually, did you have something specifically about that? I wanted to pivot slightly.
Yeah, I do. Real quick. Can you talk about how you vet out these types of groups and educators? And the reason I'm asking this is, Corey and I have actually spent close to 6 figures on mentorship and community. And I think people don't talk about this enough. And we learned from interviewing so many people way more successful than us. They answer the question the same way you did. And they say, hey, listen, I just surrounded myself with an expert and not rode the coattails, but learned from them. And, if you're willing to pay, most of them have a hand reaching down to pull you up. Right. And so my question here for you is, you seem like you've done this at an advanced level. How did you vet out the best in the US, right? How do you find them? Because I think everyone has a funnel that you get pulled into, right? And you're like, okay, this sounds great, but how do you actually know, or to the best of your ability know, and vet this out the best of the best?
Yeah, I mean, I think the whole notion of trust but verify really applies here. So everyone on their social media profiles is the best at whatever they do. And if you really dig deeper, you'll learn that they really aren't. And the best generally don't have a large social media following. Often they have no social media following because they didn't spend their time building that arm. They spent their time building that asset class. And so if you ask around to enough people, you'll hear what people are good at, what they aren't good at. Are they the real deal? Are they not the real deal? Early on, I remember it was hard to part ways to spend money. I always thought like people who join country clubs, they must be really loaded because why would anyone spend that kind of money? That's so much money. But the more I learned about masterminds, the more I was like, oh man, this is today's day and age of country club. It's more specialized. It's often, with people more maybe surrounded on the thing that I'm more interested in, growing a business, scaling wealth, as opposed to maybe like golf or racket sports. And not that I'm not interested in those, but I would rather be around people that are playing. Like my whole thing is I need to level up. So I need to be around people who play the game of life, business, and wealth creation at a higher level than me. And so early on, so I've spent anywhere from $50,000 a year to $250,000 a year over the last 15 years, hiring these individuals who were best in class at whatever the thing is, right? And really, I think you take it to the next level by going the mastermind route, because now you don't just have access to a mentor, you have access to tons of potential mentors who eventually become peers. And that's the next level. And so I remember I had this epiphany where I was reading this book. I was reading a magazine, and it was talking about, Michael Jordan, LeBron James, Tom Brady, and Brandon Marshall were like these 4 athletes that they dove into how much they spend on their body. And they were all spending $1 million plus on their body for their routines, all their stuff. And I was like, man, that's so crazy, but that's also their livelihood. So I was like, well, what's my livelihood? Well, my livelihood is actually like getting around people that are playing the game of wealth creation higher than me. So maybe I should have a budget that I'm trying to hit versus what I was trying to do is spend the least amount possible and be super frugal, which served me until it didn't serve me, right? So it's like certain things I did help me get ahead, but those same things are going to keep me from where I want to go. And so instead of saying like, I'm going to try and get the best deal, it was who's the best? I will pay top dollar. And I remember, when I joined my first mastermind, it was tough to make that. I think it was the very first one I joined was a $10,000 a year annual group. And then I eventually upgraded it to a $30,000 a year group. And then I upgraded to a $50,000 a year group. And then I was like, actually, I should do a bunch of these. I should set a budget of what I need to hit. So then I decided, all right, I'm going to spend $250,000 this year, and I'm going to hire one great coach, and I'm going to get into the 5 best masterminds out there. And I started doing research on all these masterminds, all the coaches in the industries that I wanted to learn. So I picked the best coach that I could find for what I needed at that time. And I picked the 5 best masterminds. And it ended up being more than 5 masterminds that it took me to get to $250,000. And now today, I mean, it's a minimum of $250 to $350 every single year I spend to be in the rooms that I'm in, surrounded by the people that I'm surrounded by. And that is the best investment I have ever made, because nothing else has helped me level up the way that those relationships and that mindset shifting has done for me.
You absolutely nailed it. And I really appreciate you mentioning how many you've been in and how you laddered up, because we've tried this. And I think in the beginning, when you get in, you think one size fits all, you're going to spend $10,000 and it's going to be the key that unlocks everything you've ever needed in life. Right. And we've all been through that. You're like, oh,
Yeah.
it's not. And it's lacking this. And then you pivot to the next one and you go through the cycle. It's like, are we ever going to find the right one? It sucks that this one didn't work out. It did work out in a way, and it gave you a little piece of the puzzle. And then you have to go to the next one, the next one. And so
Right.
I may have been reading that same article or something like that. I'm a huge Tom Brady guy. I grew up in New England, and all our Philly fans are probably going to kill me for that when they listen to this. But I will say that I realized how much he spent on his body. And for me, that also gave me the confidence to say, if he's doing this for his body, which is in the game, I need to do this for my brain and to get around people that are doing things outside of grinding the corporate 9-to-5 life. Right. And our podcast had an organic way of starting this for us, because every week we were surrounded by these people interviewing amazing, super intelligent people. But then it's like, I need to be in the rooms with them on a weekly and a daily basis, not just for the podcast. So it gave us confidence. You have to just try it, is my point. And then another thing you touched on, and it just made me think, and I know Corey has something else to go into, but this is just like full life optimization, right? Like I'm thinking about the Brady thing you mentioned again, and all the other gentlemen. They're spending all of these dollars on their bodies, right? Now, I know they're pro athletes. However, this is for longevity. And I think even for entrepreneurs and anyone in life, you put all this time, energy, and effort into your craft and to becoming a better professional, but you forget your health. And we've seen so many people that reach the top level of their game, and then their health starts debilitating, and then they can be wiped out so fast. So my point is, I just wanted to highlight, you need to also invest in your body. And it sounds kind of crazy, but like the things you put in your body, making sure you get a workout in, making sure you're getting massages and things like this, like just to keep and maintain yourself for the long periods of time. Because for me, this is really strange and to think about this and bring it up, but Corey and I started going through this journey where we're balancing our W-2 jobs. Then you add in the podcast, you add in the real estate business. Then I start having kids and get married. And I'm like, I don't have time, respectfully, to drink anymore and wake up and feel any sort of hangover.
Totally.
And I didn't think of I knew a couple entrepreneurs that were super successful, and they're like, yeah, I just don't do that anymore. It's my choice. I stopped drinking about a year ago. And I'm only mentioning this to you because it's not like, hey, I'm on this sober journey. It's like, it just wasn't serving me anymore. And I can now wake up and attack all the things I have to attack without having any pullback. And some people, there's an argument of, dude, you don't need to sacrifice your fun and excitement to do what you want to do. But for me, I feel optimized, and it just gets me more excited to do the things I want to do. And I want to be here for a long time, not a short time. So there's always times to dabble back into that if I want to, but we are in the thick of it in our mid-30s growth phase, so many things going on. And, I know you remember these days. It's like, I just can't do it anymore. And I don't want to. So I just wanted to put that anecdote in here to this episode, because it is super important. And you realize the people at the top of their game are doing these small little habits and changing these things that you might not see and they might not talk about as often. So, hope that resonates with the listeners.
You have to be intentional with how you level up. And some of that is cutting things out, and some of that is adding things in. And I think you got to figure out what doesn't serve you anymore, what maybe did serve you that doesn't today. And I was just at the ESPYs a couple of weeks ago. We did a session for pro athletes, helping them to learn how to create passive income. And it was a really cool experience. And a lot of those athletes don't drink because, they see the impact on their bodies, and it's an amazing thing. I'm a huge sports fan. I mean, it would have been cool if that were, maybe, I'm happy today with where I'm at, but, at one point in my life, I would have loved to have been, a professional athlete. But it was so cool hanging out with these guys and hearing their questions and just really like their lack of, in many cases, knowledge and understanding and the outsourcing that's done there. And then I was watching a really kind of cool moment for us. We work with a bunch of pro athletes, and we've got an awesome guy in our mastermind that plays currently. And so on Hard Knocks last night, I don't know if you guys watched that. It's with the Bills this year, but Damar Hamlin is a guy I've been talking with. And so there's a really cool scene where he was kind of going through his routine, and in the background of it is the Lifestyle Investor book. And I showed my wife, I'm like, check this out. My book is right here on his desk in this scene on, one of the biggest shows out there. So that was a really encouraging moment for me that the book is having impact far beyond the impact that I personally can have with people. And another reason why Naval Ravikant is spot on when he says to build, a brand, create content, put things out into the world that can live and survive well beyond you for longer than you, and in ecosystems and worlds that you're not actually operating in.
I think you nailed it. And it's first of all, kudos to you. That's amazing. It's funny, as we've evolved in this journey, we've added more and more professional athletes as interviewees on the show. And it's unbelievable to realize, hey, first of all, we all bleed the same blood. They've just put time, energy, and effort into their craft, and just they have succeeded due to whatever factor, right? And I know it's a crapshoot as you get into the NFL and the not for long league. However, interviewing some of these gentlemen, it's been absolutely incredible to see and hear the way they think and approach life. We had one gentleman on, you probably know him. His name is Devin Kennard, and he is the man. He's just like a good dude, by the way, but super smart. And we went out to a mastermind in Arizona end of last year, and he was there, and we had talked to him a number of times at the podcast, twice, like phone calls, all that. But to meet in person, first of all, big dude, biggest bear hug ever. However, it was really cool to just have conversations with him, and he opened up the eyes to, he's like, dude, when I left the NFL, it was a very interesting thing, because I'm used to going to war with my brothers every day, and there's this always competition, and we're like cream of the crop, right? We're fighting for jobs. And then you get thrown into the real world and you realize the competition is not stiff at all. And he's like, I'm looking for my dogs out there again. Like I need people around me to motivate me to continue to be this top performer, because you just don't get that as you evolve back to civilian life, if you will. And so it was a super interesting conversation. I felt like I was talking to a Marine coming back from, war or deployment. And I just want to say that's where we bridge the gap. It's really cool now. It's like having these conversations with top performers. I think that it aligns very synergistically with entrepreneurs, because we're attacking the game with our brains in different ways and building systems and strategies. But I love it. And congratulations to you. I'm a huge Hard Knocks fan, huge DeMar fan. And just like, it's showing how all tied together this world is. And I just love it. I think it's amazing. But Corey, I know
I love that you guys know DK. So we had him at our last live event, and he just crushed it. We did a little fireside chat with him. I had him on my show as well. And it was really cool because apparently my book, The Lifestyle Investor, had a huge impact on him while he was still playing. And he used a lot of those principles to buy his first round of real estate and build his passive income to put him in a place where he didn't have to take the next contract because he had passive income coming in. And I just think that is just so incredible. So he's the guy that actually opened the door for us and got our books in the hands in the PAC community, the pro athlete community, at their last event, which is really cool. So hats off to DK.
Yeah, Justin. So I last question for me, and we'll wrap up here. We mentioned this 20 minutes ago or so I'm bringing it back a little bit, but you mentioned investing in AI. And I don't know personally ways to do that. I am like intrigued by it. I'm not, I understand that it is the way of the world and the way of the future, but outside of NVIDIA, I don't know ways or companies or how someone would invest in AI if that is the way that people wanted to go, thinking that that's the biggest boom, like the tech boom was 20 years ago. So could you just give us like a couple companies, whether it's publicly traded, it's on the market, or if it's like you're talking about maybe doing more digging in the weeds of buying businesses, how do you invest in AI? And we'll leave our audience with that.
Yeah, I think you got to be careful because you've got a lot of startups, and most startups aren't going to make it. You kind of have like the big guys that are out there that are crushing it. I don't do a whole lot on the public equity side. I like private companies, and the returns are outsized. And I think if you can invest in if a niche is a strong niche, we know AI is. If you can get access to the biggest companies right now, they're not all going to make it, but you're probably going to be able to capture some of them. And then if you have some of the tertiary, level companies, maybe some of those make it, a much smaller percentage make it. But one of the things that we try and do inside of the lifestyle investor community is get access to deals that are virtually impossible for the rest of the world to get access to. So, through our platform, we've been able to invest in OpenAI and Perplexity and XAI, Grok, Anthropic. The list goes on and on. I've got, double digit AI company investments, and we're getting preferred terms often, early rounds for a lot of these companies. And so that's one way to do it. It's, again, relationships, access, getting in the right groups, the right investor clubs, knowing the right people, so you can get into early rounds of things. And so, I don't know that all those companies are going to make it. I hope they do, but, some of them are bound to gobble up most of the space. And so, yeah, that's been something that's been really cool. And I did pull up my list of investment trends that I'm keeping my eye on. If you guys want me to rattle through a few more of those.
Would love that. Just real quick before you do, I have
Yeah.
two ticker symbols for people: LRNZ and then AIQ. Those are two ETFs in the AI space. But go ahead.
Sure. All right. So here's a handful of them that I like this space a lot. So some of these, I mentioned like 5 or 6 earlier. Let's see. So I still like small and medium-sized businesses, ideally owned by baby boomers. I like minority positions in pro sports teams. I've been investing in a number of the funds that are getting, there are 6 groups basically that can invest in the NFL, and I'm excited about those and having an opportunity there. I think NIL for NCAA athletes is going to be huge. I think we're on the, kind of at the beginning of that, first, second inning of that. Esports, web gaming, blockchain, fintech innovation, decentralized finance, GP stakes. I'm a huge fan of that category. I like secondaries in a lot of things. Distressed assets, we're seeing more of those right now than we have in a while. I like companies that have long-term government contracts. That's attractive to me. I like autonomous technology. I like healthcare technology, biotech, any sort of disruptive technology. I'm a huge fan of. I think quantum computing is going to be something. So again, we're early stages on some of this. So it's like, you got to be careful because a lot of these could go to zero. So I'm, if you, again, study the asset allocation of the wealthy, generally speaking, it's only about 1% of the net worth of the wealthiest people in the world that get into early stage, meaning, seed, pre-seed, like angel investment. So it's a very small percentage. And really to get a hit, you need to be probably closer to 100 companies. The stat is about 412 individual investments to hit a unicorn, $1 billion exit. Data centers, e-commerce. I still like marketplaces. I think there's a lot of opportunity and huge multiples there. Clean and renewable energy. Energy in general I like, but clean and renewable still, I think, you get into the world of nuclear. I think that's going to continue to do well. Seller finance real estate. We're seeing more seller finance deals getting done right now with interest rates high. So I like that. Home services businesses. So plumbing, HVAC, roofing, that sort of thing. Cybersecurity, IT solutions, space exploration, health and wellness, manufacturing, especially U.S. manufacturing. That's just that's a small handful of things that I'm personally like investing in, doing research on, really digging into. But again, I'm hesitant to share some of that because I don't want people going all in on early stage stuff. Like even in the venture capital space, it's only about 4 to 10% of the net worth of these wealthy people that they invest in VC, which would be like Series A, Series B. That timing. So it's not as early as angel investments, but it's still early stage. So again, the vast majority is on sure things from the wealthiest people with a very small allocation to outliers that could have outsized performance.
No, I appreciate you sharing all those. Honestly, I'm in a small investment group, and there's been exposure to some of these. Right, there's opportunities. It's typically only 2 accredited investors, and then the minimum is about $5,000 to get in. It's typically more, right around 10,000. And so it's very interesting because you're throwing darts, right? You kind of figure one might work out, but you're not totally sure. And I think for people, they'll hear that list and they're like, "Whoa, this is overwhelming! Like there's a lot." I'd say pick 2 or 3 that jump out to you, start doing research on them, and then really dive in and just kind of follow the trends once again. But I do have one last question for you, just to put a bow on this whole thing.
Can I jump in real quick on that, Ryan, just to give a quick strategy that has been helpful for me? I got my passive income above our lifestyle before I did any sort of risky investing. So the risky investing that I have done in earlier stage companies, and obviously I prefer doing early stage with institutional investment behind it, with big names. I didn't do that until I had surplus income. So in other words, I have money coming in every month from passive income activities, different assets that I own. And so the risky stuff that I do is coming from the dollars I know are going to keep coming in every month. So I'm not sacrificing the principal investment dollars that I need to live life on. It's only the surplus dollars that I'm putting at risk.
That's huge. And it's actually helped me stray away from certain opportunities. Put it this way, like a $10,000 hit right now where I could be doing something else with it. Just to, once again, like I said, throw darts and hope that this thing 10, 20Xs. My cash is best utilized somewhere else for the time being. But my last question for you is, do you have a specific metric that you use when to exit a property or an asset? For an example, let's just say you're holding a rental property and it's cash flowing X amount of dollars, like $400 or $500, maybe more than that. But your initial seed money, when that like 2-3Xs or whatever it is, at that point, will you exit the property? We're taught from the beginning stages of learning this game that you buy and hold and you keep it for 30 years. But I'm just curious if you have any metrics where you say, hey, the velocity of money has kind of ceased here. I think I can use this $100,000 to $200,000, whatever I've made from this, and accelerate it even further for the next opportunity.
Yeah, for me, it's a pretty simple rule. It is, and it's similar to what Buffett talks about, where if I get an offer for more than what I would buy that same asset for, I know it's time to sell. I have tried to time the market. I have tried to squeeze every ounce of juice out of an asset before, and I've missed killer opportunities because I was penny wise and pound foolish. So really, for me, the bread and butter is anytime I can take some sort of an exit to de-risk the deal, I'm going to do it. So if I take some partial exits along the way, I'm very comfortable doing that. I've done that in a lot of different deals. But at any point in time, I get an offer that to me is too good to pass up, where I just know I would not buy this asset at that price. I will sell and I will take that money and reinvest it. I have enough avenues to be able to get that money to continue to compound for me. So I'm going to take the wins where I can take the wins, because the economy can change on a dime, as we've all seen, and I'm just not going to risk that anymore.
I love it. Well, Justin, this has been an incredible episode, very eye-opening, and I think this is the next level for a lot of people. So if people are interested in potentially networking, learning more about you, and just finding you, where can people connect?
Probably the best place is just to go to lifestyleinvestor.com. We've got all kinds of stuff. We got free things. We got, courses. We've got master classes. We've got the masterminds. But there's really a ton of free content. Our podcast, like yours, The Lifestyle Investor, is a top 1% of all downloaded podcasts globally. The Lifestyle Investor book is a top 1% of all books ever sold in the history of all books. All the proceeds go to fight human trafficking. And I really think the book is geared towards total novices and total experts. So it can kind of cross both spaces pretty well. And one of the things that I love, I guess there are a couple of things I'd love to offer your community. One of them, we did a very long asset allocation of billionaires for one of our sessions at our live event that we have created as a free product for people. If you go to lifestyleinvestor.com/roadmap. It's called the Roadmap to Passive Income. And we have a built-in calculator that allows people to enter in dollar amounts in different asset classes to figure out how to get to financial freedom in a way that actually mirrors what billionaires do. So that's super helpful. And then a lot of people just kind of want to know, what's the next step? Like, how do I, what's the next path for me? And so we do these consultation strategy sessions with people. They're generally $500. And someone can meet one-on-one with our team. But for your community, for anyone listening or watching on your podcast, we'd love to do that for free. So anyone can book a call at lifestyleinvestor.com/consultation, and you get a free call with a team member that can really help share what potential next steps could be based on your exact situation.
Love it, man. That's value if I've ever heard it. So you heard the man. If go to lifestyleinvestor.com/consultation. Is there a code that you want to, like, how will people be able to get that for free?
Yeah, that link will automatically discount the pricing. So it will show up as a zero cost. There will be a price listed, but it'll basically say no cost.
Awesome.
Amazing. Well,
Justin,
thank you very much, Justin. This has been a blast. You opened our eyes to a lot of new things today, and couldn't appreciate it more. So thank you.
Thanks. Great being on the show. Excited to have you guys on Lifestyle Investor Podcast next.